This is Horizon's Middle East and Africa. Our top stories this morning. Closing in, oil slides below $100 a barrel and Asian stocks climb as the U.S. says it's nearing a deal with Iran that would reopen the Strait of Hormuz. Congo suspends flights as regional health ministers warn of escalating cross-border risks from the spread of Ebola. The DRC says there are more than 900 suspected cases and more than 200 probable deaths. And Turkish police raid the main opposition CHP party's headquarters amid an escalating leadership battle. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersechi. Happy Monday to you. And plenty again for the markets to digest, especially some of these comments over the weekend about potentially nearing a deal between the U.S. and Iran, as I was just mentioning there. Let's check in on how markets are dissecting some of the news headlines from over the weekend as we start the week. We have Abir Abu Omar in Dubai with us. Abir, what are you watching?
Good morning, Jen. Look, I mean, perhaps unsurprisingly, the broader risk sentiment in the markets is turning upward. Today, we're seeing S&P futures 0.9 higher, Asian equities 1.3% higher. Now, something to bear in mind is that a lot of markets around Europe, Asia, and the United States are closed today, but this is perhaps a reflection of what we're going to see in markets when they open. And this is due to what you have mentioned about nearing a deal between Iran and the United States. Now, the latest we have is from Secretary of State Marco Rubio, who was in New Delhi this morning, speaking to reporters, saying a deal is possible today. He doesn't want to get things spoken about before it actually happens. But we saw the slew of news that happened yesterday with President Trump and the Iranian side saying that there are some last details to speak about when it comes to nearing the deal. So you're seeing the upside in equities futures in the U.S. Again, Memorial Day off in the United States. S&P closed on Friday, the 8th week in the green. Now, when it comes to Asian equities, both Hong Kong and the Kospi in South Korea are closed. So MSCI Asia Pacific is trending upwards because of a surge in the Nikkei in Japan that is open 3% higher. Now, the story is obviously oil markets. We know still that the Strait of Hormuz is closed. The physical movement of ships is still constrained, but the positive news is leading to a decline in Brent crude prices below $100 a barrel for the first time since April 24th, Jen. So we're seeing that in oil prices again as this positive news comes from the Middle East. U.S. Treasuries, cash trading on those is closed today because of that holiday. So we're looking at the Bloomberg dollar spot index turning lower. Now, again, the dollar was seen as a safe haven throughout this conflict over the past 10, 11 weeks or so. Today, the dollar is trading lower among G10 currencies, and that brings prospects for those hawkish Fed tilts we've been speaking about, which turns me to the chart that we've chosen for today. If we flip the board, we take a look at the terminal chart we're seeing today, and that plugs the implied probability of a Fed interest hike instead of a cut. Now, we went into this year, Jen, thinking the Fed is going to cut rates. Kevin Warsh was sworn in on Friday. Now, the market traders are pricing in a hike by December. So I said last week, Kevin Warsh has his job cut out for him, and that definitely seems to be the case. Again, traders pricing in a hike by the end of the year instead of a rate cut. Similar policies seen around central banks in Europe as well. So definitely something to keep an eye on, Jen.
Yeah, and we'll get into some of those comments we did hear over on Friday from the swearing in of Kevin Warsh. Abir Abu Omar, Abir, thanks so much. Let's stick with our top story, though. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz, but it may take several days for both sides to get final approval. Meanwhile, in Truth Social posts, President Trump says the U.S. won't rush into a deal with Iran. He adds that bilateral relations are becoming more productive, but reiterates that Tehran will not be allowed to have a nuclear weapon. Speaking in India earlier, U.S. Secretary of State Marco Rubio said a deal could include no tolls for the strait.
We've made some progress over the last 48 hours working with our partners in the Gulf region on an outline that could ultimately, if it succeeds, leave us not just with a completely open straits, and I mean open straits without tolls, and with addressing some of the key things that underpin what has been Iran's nuclear weapons ambitions in the past. So we think we've made some progress on the outline of something that, if it works, could give us that outcome. Obviously, that will require full Iranian acceptance and then compliance, and it will require some future work on negotiating the details.
Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa, and Russia, joins me now. So, Stuart, we just heard there, it seems like we're making progress, at least towards a preliminary deal. Catch us up to speed, though, on what we heard over the weekend and how that could inform what's likely to be in the deal, and more importantly, what might not be in it.
Yeah, good morning, Jen. So there was a change of rhetoric over the weekend. You know, there were very, very bullish comments on Saturday, and I think the expectation was that we could perhaps get something signed by Sunday. That definitely changed over Sunday, and people became a little bit more guarded. Notably on the Iranian side, the language coming out of the official and semi-official news agencies there were much more guarded, I would say, than what was coming out of particularly the White House. And then on top of that, I think some of the national security hawks in Washington started to weigh in as well on when it became clear what the outlines of this preliminary deal would be. So where things stand now is that the expectation is something maybe in the next couple of days. The timeline's really, really hard to tell. But it will only be a preliminary deal. What seems to be getting cooked up is effectively an extension of the ceasefire, some sort of preliminary opening of Hormuz, and one would assume a temporary lifting of the blockade on both sides, basically to feed energy back into the market. And then after that is the tough negotiations over at least basically the nuclear file, and then after that we'll see.
And Stuart, you were mentioning a bit of what we did see over the weekend about the signing being imminent, and then it seemed to back off quite a bit. How much should we read into this? Does this signal to you potentially there's still quite a few sticking points between both sides?
Yeah, I think that's absolutely right. And based on what we've heard, and remember, this is all stuff coming out of officials and out of official news agencies and so on, so we've not actually seen the document, and that document, the final document at least, may not actually exist. Based on that, I think there's some concern that it doesn't really address any of the main things. Effectively, what the centre of it seems to be is some reopening of Hormuz, which in effect is unpicking one of the major consequences of launching this war in the first place. And then you're going to get on to the matters which sort of underlined this conflict, and that's going to be much more difficult. If you recall, under the Obama administration, it took the better part of 2 years to negotiate that nuclear deal. Here we're talking about a handful of weeks. But what is interesting is that when the Gulf Arab states started to weigh in on that mediation, and Turkey and Pakistan as well, obviously, it seems to have made a lot more headway than when they were perhaps less involved. So that's kind of interesting as well in terms of their ability to negotiate with the Iranians.
And Stuart, we have our chart up there showing energy and the reaction right now at this point. Oil selling off pretty heavily. It seems like the optimism, the cautionary optimism, is already being reflected in the markets.
Yeah, I think that's fair. So, I mean, oil is the big one, but also if you look at European gas futures, they're down by a similar sort of magnitude. You know, the dollar's a little bit weaker, not so much movement elsewhere. The other one you could look at is the prediction markets. Look, it is only a data point, and we always say that it is not a massive market. But if you look at, for instance, the odds of a comprehensive peace deal by the end of June 30th, the odds of that on Friday were at 23%. As of this morning, they're at 42%. So take that for what it's worth. But I think that is a fair reflection of that growing optimism that perhaps we're moving towards at least the early stages of a deal.
Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa, and Russia. Stuart, thanks so much for starting us off. And as we were just speaking there with Stuart, oil dropped as the U.S. and Iran edged towards a deal. White House National Economic Council Director Kevin Hassett says he's confident lower energy prices will open the way for the Fed to cut interest rates.
Again, we expect energy prices, as soon as there's a deal, to plummet. And when that happens, then there'll be a lot of room for the Fed to do the right thing at lower rates. But again, I respect the independence of the Fed and the intellect of Kevin Warsh, and I'm sure that he'll work it out on a data-dependent way.
And it's not just war-related inflation fears playing a role in longer-term borrowing costs. Rising real yields explain most of the moves higher in overall U.S. yields. Joining us now is Stephen Major, Global Macro Advisor at Tradition Dubai. Stephen, thanks so much for joining us. So let's just start here because, as we were just talking to Stuart there, a bit of cautious optimism already feeding into the market. How are you assessing how the market is interpreting where we're at right now in this conflict and potentially a resolution to it?
Yes, and good morning, Jennifer. There's so many things that the bond market has to worry about. That the conflict in this region is only part of the story. But clearly, lower oil prices, a reduced inflation pressure, taking some of the need to hike rates off the table. That can only be good news for bond markets and assets in general. In fact, it's good for equities, good for everything. But the real challenge is that this crisis has only put the focus back onto fiscal policy that was already strained. And so many countries are running big deficits. They're going to have increased defense spending. That's not going to go away. I think the number in the US that Trump's been looking at is $500 billion. So already strained budgets are going to be pushed right to the limit here. And so the bond market is anything but stable and is becoming a bit unpredictable, which I think explains these elevated yields. And in the opening segment there, you mentioned the high real yields. I think that's the explanation.
And Stephen, you actually say in your notes, stagflation is now the base scenario for bond markets rather than the risk scenario. Yeah. What we're seeing in the longer end, can you just explain how that really translates into that comment?
Yeah, so the yield curves move through phases. In normal times, you have a gently upward sloping curve from left to right. It's called a positive or normal curve. When central banks have to respond to the inflation pressure, and there is inflation, so it's actually being printed. You saw in the US 3.8%. So there is actual inflation, not just expectation. When that happens, the curve tends to invert. So the front end yields go up more than the back end. But then there's this looking through into afterwards. If you have a recession or you have growth pushing towards recessionary levels, then central banks have to make a complete U-turn. That's why this yield curve is anything but predictable. And I talk about the stagflation scenario becoming more like a baseline, means that in fact the curve could start to bow in, and that means the belly, the middle part of the curve, should do better than it has been.
Does that completely box Kevin Warsh into a corner now?
Yeah. So, Jennifer, I think we have to give him some time. And I think, like in any new job, we should allow the new person some weeks or months to get their feet under the table. But there is this paradox or inherent contradiction in what we know about him. So what do we know? We know that, number one, he wants to cut rates, or at least I presume that was part of the interview process for this role. And secondly, he's known to want to shrink the balance sheet. But the Fed's actually expanding through the purchase of T-bills at the moment. So there's something contradictory there, the easing on the one hand and tightening on the other. Markets are priced at the margin. If the Fed starts to shrink the balance sheet rather than expand it, that's a tightening of policy. Cutting rates is obviously an easing. So there's that one question I would have for him, really.
Stephen, how are you advising your clients then, not just when it comes to the bond market, but also for equities?
Well, yes, and I think a great number of questions have come my way just in the last few weeks about the stagflation scenario and what it means for equities. The short answer is I don't really know, but I'll have a go as I'm here. I think that the equity market seems to be able to ignore higher yields, whether they're real or nominal, because of the good earnings that are coming through, especially in the US. So that really absorbs the rate shock. Meanwhile, GDP is okay, again, in the US, less so elsewhere. Now, at some stage, these high yields might start to expose leverage in the system. You might get some stress. And if the earnings numbers start to fade and if the GDP weakens somewhat, then the bond market could be part of the explanation for equities starting to correct. But how many people have come on the show and called a correction in the equity market these last few years and been found wanting? It seems that equities have got their own momentum right now, but one factor that would start to challenge those valuations is the higher bond yields.
Yeah, and that's what we'll wait to see play out. Stephen Major, Global Macro Advisor at Tradition Dubai, joining us there in our Dubai studio. Stephen, thanks so much for joining us and for your insights this morning. Now, coming up, Turkish police raid the main opposition CHP party's headquarters in Ankara using pepper spray. We'll have more on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Turkish police have entered the main opposition CHP party's headquarters in Ankara using pepper spray. The police acted to seize control of the building after Kemal Kılıçdaroğlu, the party's court-appointed chairman, had sought government support to oust rival Özgür Özel. Bloomberg's Simin Demokan joins us from Istanbul. Simin, walk us through what's happened over the past few hours and days.
Yes, on Sunday, we saw dramatic moments outside the main headquarters of the CHP party. That's Turkey's main opposition party based in Ankara. The police flooded the building with tear gas in order to remove Özgür Özel, CHP leader, from the building. Now, of course, last week, an Ankara-appointed court said that the Congress that took place in 2023 was null and void, and Özgür Özel was no longer the party leader and was replaced by the former leader, Kemal Kılıçdaroğlu. Özgür Özel initially refused to leave the building, but once he did, he tore up the eviction notice and said, "We are leaving, but we will be coming back." Now, of course, Kemal Kılıçdaroğlu ruled the CHP for 13 years. However, he didn't have any success in elections against President Erdogan or AK Party. Özgür Özel is 51 compared to Kılıçdaroğlu's 74 years old, and he was seen as a more dynamic leader. But of course, this unrest within the political party could help President Erdogan grip his hand in power. Of course, Erdogan has been ruling the nation for more than 2 decades.
Right. Simin, what does this mean for the financial markets at this point?
Well, investors hate uncertainty, and it's exactly what they're seeing with this political uncertainty in Turkey once again. We saw a lot of volatility in the markets on Thursday and Friday, and it's worth noting that the markets here in Turkey will be closed for most of this week for a religious holiday. However, ever since the unrest in the Middle East, the Turkish central bank has been flooding the market with dollars in order to support the lira. And this, of course, has put a huge strain on its reserves. And we saw the similar action last week due to this political uncertainty. So, of course, economic challenges are also seen. Turkey has one of the highest inflations in the world, running above 30%. Right.
Bloomberg, Simin Demokan. Simin, thanks so much for the latest there in Istanbul. Appreciate it. Now, coming up, Investec Group CEO Fani Titi explains how applying for a license in Ireland will help the bank push further into Europe. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Investec has applied for an Ireland banking license as it seeks to boost its presence in Europe and tap one of the world's largest financial systems. Group CEO Fani Titi told me the bank's application for a license in Ireland signals its ambitions to expand further into Europe beyond its existing UK presence.
We are investing heavily in this market. Clearly, there has been some disquiet about some of the outcomes, particularly with respect to the motor finance sector. Thankfully, we were very small in that sector. Our provision was the sum total of £30 million, and we haven't revised that provision because we were conservative in the first place. So for us, while regulation is quite tight, we've always placed our clients at the center, and as a consequence of that, we haven't really been affected as severely by the tightening of regulation, particularly around customer duty. So we see opportunity here, and we will continue to invest in our private client capability despite those recent developments. And as I said, they don't affect us as severely.
Fani, you mentioned you're looking at hiring. Is that just related to the UK, or could that potentially be related to other ambitions that the bank has across Europe? We have an increasing presence in Europe. We have applied, for instance, for a banking license in Ireland. That will allow us to work a lot more front-footed in Europe, given that with Brexit, UK banks were not able anymore to operate as freely as they did before. So we will be doing more in Europe, following our clients and supporting them. We have a wealth business in Switzerland, for instance, that supports our South African wealth business. We are hiring there and investing more in our capability. In fact, we had a small bolt-on acquisition last year in Switzerland. We have started to operate in the Middle East, in Dubai, on the wealth side. Obviously, with the war in the Middle East, we've had to scale down our plans in the short term, but in the long term, we continue to be interested in that region. So overall, we are on our front foot. We are investing, we are expanding, and we are hiring. Obviously, we're also investing in technology to augment the work that we do for our clients. When you talk about Ireland, have you already applied for that license? What does the timeline look like? Look, we've been in discussions with the regulator there for quite some time. It takes a bit of time to go through these processes. We do expect that in the immediate future we will be successful, and we are quite excited about the opportunity that opens for us in Ireland, in the rest of Europe. So it is a short-term outlook in terms of when we will be able to operate with a fully granted license. That was Investec Group CEO Fani Titi speaking with us earlier. Now, coming up, we'll unpack the economic outlook for South Africa and the country's interest rate path next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Closing in, oil slides below $100 a barrel, and Asian stocks climb as the U.S. says it's nearing a deal with Iran that would reopen the Strait of Hormuz. Congo suspends flights as regional health ministers warn of escalating cross-border risks from the spread of Ebola. The DRC says there are more than 900 suspected cases and more than 200 probable deaths. And Turkish police raid the main opposition CHP party's headquarters amid an escalating leadership battle. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersachi, and we are still awaiting potentially a nearing deal between the U.S. and Iran. But still, quite a few markets are closed for a holiday. Let's just get to Abir Abu Omar for a bit more of what is going on in the markets. Abir?
Good morning, Jen. Well, look, I haven't seen equities that much in the green and oil that much in the red in a while, but what you're seeing on the S&P futures picture is almost 1% higher now. The U.S. is closed for the Memorial Day holiday. You have a lot of markets in Europe and in Asia closed as well. That includes South Korea's Kospi and the market in Hong Kong as well. But the MSCI Asia Pacific is also painting a picture that is stemming from this positivity we're seeing out of the Middle East and the possibility of nearing a deal. We know from Secretary of State Marco Rubio just about an hour earlier, him saying that we may see a deal coming today. Now, that follows the news we saw over Saturday and Sunday from President Trump and the Iranian side. Nothing is for sure yet. There are still some sticking points in those proposals between the warring sides. But again, MSCI Asia Pacific doing very well on that news that is coming out of the Middle East. It was prone to a lot of the inflationary risks stemming out of the region and higher oil prices. And when we speak about higher oil prices, that today is not a thing that we're seeing. We're seeing oil actually dive below $100 a barrel for the first time since late April. So you're seeing Brent crude 5.4% lower now. Just important to note that the Strait of Hormuz is still blocked, still double blocked, should I say, and the physical movement of ships is still very much constrained. Iran did say that about 33 vessels had gone through the Strait of Hormuz with the approval of the RRGC over the weekend, but still a fraction of what they were pre-war. Now, cash trading on treasuries is closed today because of the holiday. We're choosing to look at the dollar index. Down today, it is doing it is not doing well against G10 peers. It's acted like a safe haven throughout the past 80 days or so, Jen, but we're seeing it fall significantly today, and it brings up this argument for interest rates and a Fed tilt towards a hawkish tilt versus a dovish tilt, which brings me to the chart that we're choosing to look at today. Now, Kevin Warsh was sworn in on Friday in a ceremony that was hosted by President Trump, Jen. But this chart essentially plugs the probability of a Fed that will turn hawkish versus dovish. Now, we turned into this year, we came in thinking we're pricing in rate cuts, but as a matter of fact, traders are now pricing in a hike by December, so fully pricing in a hike by the end of this year. So Kevin Warsh, again sworn in on Friday, has a job cut out for him. Just something worthy of noting as well is that the cheaper oil prices today and the de-escalation coming out of the region is turning Treasury futures higher, and we're seeing similar movements happen in New Zealand and Australia that are trading today in their bonds. So bond yields are falling in those countries, Jen.
Thanks so much, Abir Abu Omar there with our market update. Now, here in South Africa, traders are tracking the rand after signs that the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz. On Friday, the South African currency was the best performer against the U.S. dollar among 14 other major currencies. Joining us now is Kgothatso Baloyi, trading structurer at RMB. Kgothatso, thank you so much for being with us. So we were just hearing there from Abir about some of the optimism that is setting into the markets with a potential deal between the U.S. and Iran. How do you see that feeding into the South African economy right now? We're seeing a bit of positivity for the rand. Do you see that continuing to show up in rand strength?
Yes, no, definitely, because last week, dollar rand closed at 16.50. That was a strong support level that we saw going into the week. Today, we're waking up and it's broken that 16.50 support level. So looking at it now, it's about at 16.33. So that is strong bias towards a stronger rand against the dollar. We've been looking at headlines throughout the week and throughout the month in general, actually. So easing tensions around Iran really do bid well for emerging currencies. So that does see the rand trading quite strong going into this week as well.
But it still doesn't, as we've been talking with a number of our guests, ease any of the inflation concerns right here in South Africa. How does that factor into what we are seeing here and what we might see from the SARB then later this week?
So The SARB had said that they're seeing oil at about 80, and the worst case scenario was if oil is about at $100 per barrel and the rand is trading at 4% weaker, 5% weaker. The rand is now 4%, if not less, weaker than the SARB had bidded for. But going into this week, I see the SARB probably hiking rates by about 25 basis points, and this is just to curb the second round effects that come with inflationary pressure from oil prices.
Does the SARB, though, risk potentially falling behind the curve? We could, we were talking about what we could potentially see from the new Fed chair later on. What do you expect the SARB and the governor then to telegraph to the markets later this week?
So the SARB has been very clear in terms of their stance going into even the last meeting, right? They did say that it's very important that they hike rates in terms of bidding credibility for their 3% inflation target. So inflation came out at 4% just last week, core inflation at 3.6%. This is way above what the SARB is targeting. So in order for credibility to stand for the SARB, they do need to make sure that they're curbing that inflation in order for the market to actually take them as serious in terms of the inflation target, yes.
And you say the inflation narrative is becoming more concerning. How much of that is triggered because of the fuel price that we're looking at right now?
A lot of the inflation right now is triggered because of the fuel price. I mean, when you look at that 3.6 versus the 4%, that 0.4% is basically fuel and food prices. So in terms of inflation, the fuel is playing quite a big role in terms of that, yeah.
So then how does that factor into what we see from the SARB longer term then?
Longer term, the SARB is saying if oil is above $100 per barrel, if inflation is about 5%, then obviously they are to hike. We're seeing the peak for the repo rate to be about 7.25%. At the moment, we're at 6.75%. So a 25 basis hike this coming meeting, a 25 basis hike the coming meeting, and if the oil price story doesn't stabilize, we do see a risk of another hike in terms of the SARB, yes.
How much is contingent on what we do see from the Fed, though?
I mean, the inflation story is a global story. Yeah. It's not specific to South Africa. And everybody's looking to see what does the other central banks do. But we're all facing the same thing. We're all facing inflationary pressure from the oil prices. So, yeah, I don't see the Fed, I don't see the SARB necessarily looking to the Fed, but also just they probably will look more towards what is the impact of that oil prices on inflationary pressure in South Africa.
And so then when you're looking at what you're doing for your clients in terms of how you're advising, how do you advise in the short term versus the long term? But it seems like there's still quite a bit uncertain, especially as it pertains to the global inflation picture, what's happening in the Middle East, and more broadly, the hiking cycle globally.
So in terms of advising of clients, I think at the moment, headlines continue to drive the currency. 1650 was a proper support level. Now we're seeing dollar rand at 1630. We were projecting to see dollar rand at 1650 in June. And now we're probably having to revise our currency expectation in terms of the rand. So 1625, 1620 next support, and then we see what happens from there. Mainly will be driven by headline, what happens in terms of the US and Iran.
What's the risk here for you? What is it that you're watching for that could derail some of these projections that you've outlined here?
I mean, the risk is that things blow up in Iran and we see dollar rand spike all the way to 1685 and break that 1685 level. 1685 has been a strong resistance level for us, right? If we see it break above that, then 17 is on the cards. So that is mostly what is at risk at the moment, yes.
But that's not your base case at this point. All right, we'll leave it there with you. Kgothatso Baloyi, trading structure at RMB here, joining us to break down some of the impacts on the South African economy. Thanks so much. Now, for a look at some of the other stories we're following in the region, Uber has offered to take over Delivery Hero in a deal that would value the German delivery company at about $11.6 billion. This comes as the U.S. tech giant works to ramp up competition with DoorDash globally. Uber has offered approximately $38 per share. Uber, which owns 20% of Delivery Hero, would be on the hook for about $9.31 billion under those terms. The ride-sharing giant also has options for another 5.6% of shares. SpaceX upgraded Starship has completed a key test flight, deploying mock satellites in orbit before returning largely intact. The spacecraft released 20 dummy Starlink satellites and 2 test units for next-generation hardware. The test comes as the company gears up for a public offering that seeks to raise as much as $75 billion. Sources say Anthropic is set to close a funding round as soon as this week that may top $30 billion. That would give the company a valuation above $900 billion. Such commitments would see Anthropic's valuation leap ahead of rival OpenAI, which reached $852 billion in a funding round completed in March. OpenAI is said to be preparing to file an initial public offering in the coming weeks. Now, coming up, the world is losing the Gulf's petrodollar stimulus. We'll take a deep dive into how the war with Iran is draining cash, cutting into the region's economic power, and shifting global influence. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The ongoing war with Iran has severely disrupted the Middle East's energy exports and trade routes. As a result, the supply of petrodollars that have funded massive overseas investments are under threat. For more, we're joined now by Ziad Daoud, Chief Emerging Markets Economist at Bloomberg Economics. Ziad, thanks so much for being with us. Let's just start here. How exactly are we seeing the closure of the Strait of Hormuz hitting the Gulf's bottom line?
Well, the Iran war and the closure of Strait of Hormuz is doing a few things. The first thing it's doing is that it's reducing the volumes of oil and gas that the Gulf is exporting to the world. Now, the picture differs by country, but the aggregate one is that the Gulf countries are receiving lower income from their oil and gas exports. So that's the first thing. The second thing it's doing is that the Gulf countries are spending more at home. They're spending more on defense, they're spending more on repair, they're spending more on building new pipelines that bypass the Strait of Hormuz, and they're spending more on economic support for the sectors that are affected domestically. You combine these two facts that they're receiving lower income and they're spending more at home, and that basically means that the pool of Gulf money that's available for external investments is shrinking as a result of the Iran war.
Ziad, when you take a look at which markets and the sectors that could potentially be hit as we see this petrodollar investment dry up, which ones really stand out to you?
It's hard to exclude any market or sector. You know, Gulf sovereign wealth funds invest in all sorts of things. They invest in U.S. tech companies, they invest in African mines, they invest in Egyptian real estate, they invest in English football clubs, in Turkish bank deposits. In fact, if you even look at the biggest and deepest market in the world, the U.S. debt market, we estimate that the flows from the Gulf to the U.S. debt market over decades have helped suppress U.S. interest rates. And if these funds start to dry up, then a significant force that has helped to keep U.S. interest rates and borrowing costs low might basically fade.
Ziad, can we just talk about some of the details that you and the team outline in the report? You talk about some of the allies and Iran's leadership within this report. Can you talk about how this is likely to shift the overall dynamic in the region for years to come?
Well, I think the Iran war has basically changed the shape of the region. If you think about the Gulf specifically, I think there are multiple areas in which Gulf countries will have to rethink even when the war ends. They'll have to think about defense, how to defend their cities and their borders, having been attacked by Iran during this conflict. They have to rethink the relationship with the U.S., which is an important security partner, but it hasn't quite delivered in terms of preventing this war. They'll have to think about their own cooperation and collaboration, and whether the Iran war will increase competition between them or increase cooperation. And they'll have to think about the relationship with the global economy, how to build new routes that make sure that the flows of oil and gas from this region and energy from the region continue to flow, even if there is a disruption to the trade route. I think the big thing here is that the Strait of Hormuz has been shut once, and that taboo has been broken, and everyone will price in the fact that it could be shut again.
Ziad, let's just zero in on one of the economies, and that's, of course, Saudi Arabia, which you detail in the report. What's your assessment on the hit specifically to the Saudi economy as a result of this conflict?
Actually, for Saudi Arabia, there has been much in terms of lost revenue. Yes, Saudi Arabia today is exporting less than it did before the war, but with oil prices being higher, that offsets the volume losses. So probably, in net, Saudi is probably earning more today than it did before the war. Where the war has an impact on Saudi is in terms of spending. And we saw that in the first quarter budgetary data. And we estimate that 1 month of fighting cost Saudi Arabia about 1.5% of GDP. So that's the impact on Saudi Arabia. But in terms of revenue, it has been fine. If you look at the Aramco, for example, if you look at the Aramco profits, if you look at the first quarter budget, if you look at the trade data, they're all showing that Saudi is earning more today than it did before the war. The issue comes with the spending side.
It's a fascinating report you and your team have put out, now available on the terminal. Ziad Daoud, Chief Emerging Markets Economist for Bloomberg Economics, joining us there in Dubai. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, for a look at some of the other stories we are following, the cause of an explosion at a mine in China's Shanxi province is under investigation after the blast on Friday killed at least 82 people. The accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from President Xi Jinping and senior officials. State media says an early investigation suggests serious violations at the privately run mine. U.S. Secret Service agents say they shot a man near the White House on Saturday after he opened fire with a handgun. Authorities identified the suspect as a 21-year-old who had a prior arrest for unlawful entry near the White House in July of 2025. He was taken to the hospital where he later died. Now, coming up, Congo suspended flights to the eastern city of Bunia due to escalating cross-border risks from Ebola as the outbreak spread across 3 provinces. We'll bring you the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Foreigners seeking permanent residency in the U.S. will now have to leave the country to apply for green cards, except in extraordinary circumstances. The policy could leave applicants stranded for extended periods and disrupt families and companies sponsoring foreign workers. Immigration lawyers say the move is legally questionable and needlessly chaotic and warn litigation is likely. Also, U.S. health authorities are planning to temporarily bar green card holders from re-entering the country if they've traveled recently to Ebola-affected areas. The interim rule will remain in place for 6 months or until Health Secretary Robert F. Kennedy Jr. determines it's no longer needed. Let's just stick with the update on Ebola. The death toll from the Ebola outbreak in the Democratic Republic of Congo may have surpassed 200 as local conflict and violence disrupt containment efforts. More than 900 suspected cases have been reported across 11 health zones spanning 3 eastern provinces. For more, we're now joined by our Africa healthcare reporter, Janice Q, here in Johannesburg. Janice, just get us up to speed on what the latest is with this outbreak in Central Africa.
We've had the Africa CDC Director General Kasia saying that the situation is increasingly serious. There are about 10 countries that are now considered at risk We're really seeing an effort more globally. India today is going to be delivering about 20 tons of supplies. These are needed on the ground, and we're not talking vaccines here even, because the one that has been developed is for the Zaire strain, which is a different strain to what this outbreak is seeing. And so these are supplies like personal protective equipment, some of it fairly basic stuff that is needed on the ground. We are also seeing a ministerial meeting being called today. It will be local time this afternoon, and that will include presidents from Egypt and Nigeria and ministers rather from those countries, and ministers as well from the US and from France. The idea here is that they are trying to get global support, but make sure that it is directed through the Africa CDC and other organizations or agencies on the ground, so that it is concentrated and gets to where it needs to get. They are trying to avoid a situation where promises are made, the money doesn't really come through, or it's coming through in a variety of ways that is less efficient. They're really trying to get ahead of making sure that everything that is promised actually reaches the ground.
And Janice, you were speaking earlier about, we know that there is a vaccine for the Zaire strain, but of course we're dealing with a very different strain. How are we seeing authorities then addressing this most recent outbreak?
The Africa CDC DG Kgothatso has described this like being a soldier going into war without ammunition. They are really starting to have to rely a lot more on community messaging. They are using local leaders or local community people to go into the affected communities and really try and get the message across. They obviously have some residual, because this is the 17th outbreak of Ebola in Congo, and albeit a different strain, they do have some facilities that are specific containment facilities. And so they obviously are using those. But there's a lot of other difficulties in terms of rebel-held areas. That kind of conflict has led to a lot of displaced people. And all of these kind of things really do play into the difficulties that they are facing.
Right. All right. We will leave it there with you. Bloomberg's Janice Q, thanks as always for the latest on the Ebola outbreak there. And let's just take a quick look at where markets are. We should mention it is a holiday in parts of the world, but of course we are paying close attention to global equities as the prospect for a potential deal in the Middle East inches nearer and nearer. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.